Good morning, good morning, good morning, everybody. It is Thursday AM, the first Thursday of the month, and it's 10 a.m. So you know what that means. It is time for the Her Money and Investing Talk. Yay! Thank you so much for joining me today. It's gotten a little chilly at night. Anyone else notice how chilly it's been getting at night? Well, the nights are getting colder. And I even bought my daughter a new jacket. Yeah, she grew like a weed over the last year. And so I invested in a new jacket for her. And, I started making Thanksgiving plans with family. And this made me think about all of our budgets. Yes, budgets. So, as you guys know, I talk a lot about the financial ducks. And I talk about the financial ducks that you need to get in a row before investing. And one of the big aspects is budgeting. Now, the reason why we want to budget is because in order to build wealth, we need to create a surplus. Okay. And in order to create a surplus, you need to spend less than you make. Okay. We got that? So, with that said, budgeting is so important, is a critical part of creating that surplus, really investigating what you are spending your monies on and try to get that spending underneath how much you are making. Now, with that said, when I started thinking about, the heating bill and how cold it's been getting at night and this new jacket for my daughter, I was thinking about seasonal budgeting. Yes, seasonal budgeting. The reason why we want to think about seasonal budgeting is, so you go through your budget, you look at your current spending, right? But some months you spend less than other months. And when you think of Thanksgiving and, for example, Thanksgiving dinner, or you think about clothing that you might need to buy when it gets cold out, or when you think about the other holidays in December where you're going to be making dinner, or even all the holiday gifts, right? It seems like November and December are such large spend parts of our annual budget. There's so much spending that happens in these months. So it's important to revisit your budget pretty often so that you can take into account these other types of spending. So, with that said, it's so important to also forecast, right? So if you're looking in October and you're like, okay, this is how much I spent in September and October. But if you don't take into account your forecast for November and December, right? And maybe the spending comes off in January. Yes. So you can say, okay, there'll be less spending in this month, right? Or in January, February, March, but maybe you want to get away. Maybe you want to have a little bit of a vacation at that point in time. So, what I would love for you to do is start revisiting your budget on a monthly basis, right? And start thinking about the future as well. So, not only analyzing what you are spending currently, but also what potentially you could be spending in the future as well. This is a critical part of your budget and making sure that you have a surplus so you can put those monies to work so you can start building wealth. Yes, absolutely 100%. Now, Wall Street has been trying to figure out exactly what the consumer will be spending their monies on, right? So, what I'd love to hear from you ladies as you come into the stream, tell me, what are you guys spending your monies on? Where are you repurposing, your budgeting? Where are you changing your spending habits? These are really insightful thoughts that you can have when it comes to investing in cycles, economic cycles as well. So with that said, when I was thinking about, where my spending is going and where your spending are going, and just all the really large seasonal costs that we have, such as increased food prices, gas prices, natural gas, I was thinking about, these are all commodities, right? These are all commodities. And so I started really thinking about commodities and talking to you guys about commodities after seeing two really interesting headlines come across this week. The first one had to do with Russia pulling out of the deal that allowed some vital grain exports from the Ukraine to pass through the Black Sea despite the war. And because of Russia pulling out of this deal, the prices of wheat and corn on the global commodities market rose significantly. Now, I just saw on CNBC that Russia did agree to rejoin the Ukraine grain deal, which ended the standoff, and so things are stabilizing. Things are stabilizing, but what I really started thinking about this was, okay, global commodity markets. You guys hear that and you're like, what does that have to do with me? What does this deal with Russia have to do with the food that I'm putting on the table? Right? Well, the basics of what goes into our meals are soft commodities. Now, I'm going to talk a little bit more about the different types of commodities and what they are, but there was another headline that came across, actually two more headlines that came across that made me start thinking about this, explaining the concepts of commodities and how they affect us in our everyday life. Now, there was another headline that came across this week, and Reuters actually did a report that it might not be so impactful, and I saw this headline come across today, but it was the Biden windfall tax. And he had threatened it earlier this week after seeing crazy earnings out of the oil producers. He's like, you know what? As oil prices, gas prices for the Americans are so high, they shouldn't, the oil producers should not be benefiting from that. Okay, so that is what this windfall tax is. It's a threat, and Reuters actually reported that Biden's threatened windfall tax is unlikely to pass U.S. Congress. But headlines like this really remind me how sensitive we are to oil prices. Okay. And not only that, but I saw this other headline that came out of the New York Times that was talking about Europe bracing for winter and how they're doing like 2-minute showers and all of these extraordinary steps to decrease energy use, because they're trying to move away from their primary provider, Russia. Could you imagine? Natural gas prices being so high that you had to take a 2-minute shower? Yes, crazy. Like here in the States, I don't think any of us could think about something like that. So, what is a commodity? What is a commodity? Well, a commodity is a raw material or primary agricultural product that can be bought or sold, such as copper or coffee. Now, we all love, I think most of us, I love my morning coffee. I love my morning coffee. But did you know that coffee is the second most traded commodity in the world, only second to crude oil? Yeah. And it is also the oldest commodity in the world. Now, let me just check out this chat here. We have some people in here. So, Carissa was talking. Hi, Carissa. Thanks for showing up. And she was talking about her budgeting as well. Oh, actually, there's a feature here that says show. I'm going to try it. Okay. We're going to try something new today. Oh, there it is. Carissa, So anyhow, this is brand new, being able to like show my comments. I'm so excited about this. Okay. So what Carissa says is I have a separate savings account for travel and holiday spending. I have it set up on auto draft 2 times a month so I don't have to think about it because these are 2 big spending categories for me. I love that suggestion, Carissa. Thank you so much for chatting in. I really appreciate that. And then we have Karen here. Karen's also chatting in. Hey, thank you so much for contributing, Karen. It's so good to see you back. She's saying food is huge right now. So not going out to eat as much, focusing on wise spending at the grocery and cooking at home. Interesting. Okay. So you're saying that you're going out to the restaurants and whatnot is decreasing, right? But, and you're being a little bit more frugal at the grocery store. I love that. And also think about restaurants is in the consumer discretionary sector. Yes, those nice to haves, not the consumer staples, not the needs, but the nice to haves. Thank you so much for contributing. I really super appreciate that. So let's talk a little bit about the types of commodities out there. So investors break down commodities into 2 categories. We have our hards and we also have softs. So hard commodities require mining or drilling, okay? And soft commodities are grown or ranched. So there are 4 main types of commodities. The first one is agricultural products. These are soft commodities. They include crops like coffee, corn, wheat, soybean, cotton, and lumber. Okay, and I want you to pay attention to, the different items in these categories. The second soft commodity category is livestock and meat, and they include live cattle, beef, pork bellies, and milk. So then we get into our hard commodities. So we have our energy products like crude oil, natural gas, etc. And even coal is in that category as well. And then we have our metals, which are also in the hard commodities, and they are precious metals like gold and silver and copper, aluminum, and palladium. Okay. So when we're thinking about these commodities, right, we are thinking about raw inputs used in the production of goods, whatever that is. You can even think of your end product being your Christmas dinner, right? You have all of these agricultural products, right, which are soft commodities that are made into the different products that you use for example, your Thanksgiving dinner. So you have your grains that go into your stuffing, right? You have your cotton that goes into maybe your sweaters. Okay, so these are the raw inputs that go into goods. And so when the prices of these commodities increase, guess what happens? The prices that you pay for products increase. And so does the cost of the companies that use these products as well. So it's really interesting to see how commodities can affect you in your everyday life. And I mean, even looking at, for example, like my iPhone, right? My iPhone. So we have metals in it. Those are inputs, right? So we have my sweater, right? It has cotton in it. That is a commodity input. So you can start thinking about the world in terms of commodities. Do you guys get where I'm going and why I'm like really thinking about commodities right now, especially with inflation and how for example, the Fed is trying to control inflation with the rate hikes, right? But at the same time, we have all of these geopolitical events that are going into our commodities as well. So that's just something to think about, how your global news, your global events trickle down into the prices that we pay for everyday products. I hope you enjoyed this. I hope you saw how my little rabbit hole came together so you can see how this all works together. So I saw on the tech front, I saw a really interesting headline on Seeking Alpha this morning, and it has to do with the fact that Apple is now worth more than Alphabet, Amazon, and Meta combined. Yes, yes, yes. So the way that this goes and what they wrote in Seeking Alpha was, what a difference a year can make. Apple closed out Wednesday's session with a market cap of $2.307 trillion, making it more valuable than Alphabet, which is the parent company of Google, Amazon, and Meta, the parent company of Facebook, combined. And because they are worth a total of $2.306 trillion. Yes. And what I wanted to do was also define what market cap is, because this is one of when you're going into your trading account and you're looking at the fundamentals. Market cap is something that's really important to understand. You can also, like I talk about in my classes and in my chats, I also talk about the market cap, like whether it is a large cap, a mid cap, a small cap. So it's important to understand what your market cap means. So market cap, or capitalization, is equal to the market price per common share. So the price of the shares multiplied by the number of common shares outstanding. So market cap can actually change. It can change with the fluctuation of the price of the shares. Yes, so it's not something that is a constant. And that is why currently the market cap of Apple is so high compared to these other companies, because after earnings season, we had strong Apple earnings, which elevated, the stock price. Whereas we have, Alphabet and Amazon and Meta not doing so great this quarter. Now, what was interesting is that YouTuber Joseph Carlson tweeted a really interesting thing. And it was that he was looking at the free cash flow of these companies. So what he goes on to say is, take a look at last quarter. Apple free cash flow was 20 billion. Google free cash flow was 16 billion. Meta free cash flow was 0.3 billion. And Amazon free cash flow was negative 5 billion. He does go on to say, now, of course, one quarter doesn't paint the full picture, but Apple is posting massive free cash flow like clockwork where others are not. So when you're looking to invest, maybe another item to put on your checklist is looking at the free cash flow. I'm definitely going to be putting that on my identifying investment, cheat sheet for sure. So moving on, I did see a really interesting headline in The Guardian this week. And I like to just put out some interesting headlines that I see out there. And according to The Guardian, the top 1% of earners in the UK are responsible for the same amount of carbon dioxide emissions in a single year as the bottom 10% over more than 2 decades. Yes. Okay. The findings highlight the enormous gap between the who have been termed the polluting elite, whose high carbon lifestyles fuel the climate crisis, and the majority of people, even in developed countries, whose carbon footprints are far smaller. Now, another interesting tidbit that I heard this week on the news was that not only is it carbon dioxide emissions, but it's also waste from fashion. Yes. So I was listening to an interview this week, and it turns out that the disposal of clothing, especially polyester, which is plastics, is significantly done in countries that are more developed, richer than poorer countries as well. So yes, this whole item of developed countries versus and richer countries contributing more to pollution than less developed countries. Now, this is a theme that we are definitely watching as it comes across. And I just wanted to bring that up. And it's just something that made me start thinking about, even my consumption of clothing and my kids' consumption of clothing, and just us as a family and our imprint on the environment as well. So that's just something that I started thinking about after seeing this headline, and I wanted to share it with you guys as well. In closing, I like to end with the inspiration of the day. And today's inspiration of the day is: your financial future will be brighter than the past. Let me repeat that. Your financial future will be brighter than the past. And this is my wish for you. Yes, this is my wish for all of you, that no matter where you are in the process of getting your financial ducks in a row, whether it is budgeting, whether it's paying down bad debt, whether it's emergency funds, or even, contributions to your managed retirement account. As of today, your financial future will be brighter than the past. And I'm really amused and amazed by all of you that come every single week and participate. You just make my day, week. And I love seeing you and your passion that you have for your finances, for your budgeting, and making tomorrow brighter for yourselves financially, for building that wealth. I'm so proud of all of you. I know it can be overwhelming. Getting your ducks in a row. And you may even feel a little bit apprehensive about learning the language of investing. Hopefully, this show and my classes make it a little bit more approachable and less scary. But it is baby steps, and you can do it. You're doing it just by being here today. And should you wish to take your money and investing journey outside the show, check out my new self-directed classes, sign up for my mailing list to be notified of upcoming investment ideas, interviews, panels, workshops, and announcements. I have a new event that's scheduled in a couple of weeks. You can check it out on Facebook and on my website. It is the Love and Money event. Who doesn't love to talk about love and money? And in this event, I'm going to talk about the top money questions to ask a romantic interest. Ooh. Whether it's the first date or if you're about to tie the knot, these are the financial questions to ask at different points of your relationship. And the reason why this came about is because we had, in my workshops, we have different topics, and we talk about, the financial ducks. And for some reason in one of my workshops, this subject came up, and it was such a heated conversation. I said, oh my goodness, I need to do this as a live event so that other people can participate, because it is so important, but entertaining at the same time, and a little faux pas, right? A little faux pas. Like, who really talks about these things? So yes, I hope to see you there for my upcoming Love and Money event. And then I also have my free little mini course that I have, where you can, as a woman, see the top 3 questions that women have when they're starting their investing journey. And I'm going to answer those top 3 questions as well. And this free little mini course, is called money sense. So yes, I hope to see you there. I'm Jessica Perrone, founder of Her Financial IQ. You've been watching the Her Money and Investing Show. May the markets be in your favor. Bye now. Thank you for joining. Have a fantastic day.